Hello, chart watchers, and welcome to this Friday, May 17th, 2019 Market Watchers Live with your hosts, Tom Bowley and Mary Ellen McGonigal. Let's take a look at what's going on in the market today. You can see right here, we got the Dow Jones Industrial Average trying to climb higher, up 32 points. The S&P 500 down 1 point. The NASDAQ down 24. The Russell 2000 down 9. 10-year Treasury yield down about 1 basis point. It was down earlier today, down threatening that 2.36% area. It has recovered again, back up near 2.40. That's a good sign. We've also had hollow candles now, 7 of the last 8 days. So it starts off with the yield down, but we do rally into the close. That's been the pattern here of late. Volatility index continues to drift lower, even though the market's been a little bit more volatile today, moving back and forth. We do see the VIX moving down, threatening a new recent low. The utilities group and healthcare, these are two of the better performing groups today. They're both in the defensive area, so not so great there. Energy lagging today. We've seen a lot of that. You can see we're still well off the highs that we saw back in April, barely making any kind of ground to the upside here. Mobile telecommunications, one of the top performers. I'm going to talk about this chart in just a bit, but I do like the recovery here. Nice move to about a 3 to 4 week high today. Really strong action there. Footwear also trying to move higher after gapping down back earlier this month, maybe about 10 days ago. We've been trying to get back through 1550. We're there today. Can we hold? I don't know. We'll take a little bit more of a look at that chart in a bit as well. Semiconductors continue to be under pressure. Today, they're down another 22 points. They did gap lower despite better than expected results from both NVIDIA and Applied Materials. You can see both of these companies after reporting earnings. NVIDIA at one point was up quite a bit after hours last night, but with futures turning lower this morning, NVIDIA not really making much headway today. Applied Materials, though, has had a pretty good reaction to its earnings report. And then finally, Deere & Company. Deere has been down now for about the last 2 weeks, almost every single day. Really struggling after breaking below. We could go back several months, but that support area around 155 was pretty strong. We gapped below it on Monday, and we have continued moving lower, even though the market has been rallying throughout most of the week. So kind of an interesting day for sure, especially certain areas of the market. Before we get into today's action, I do just want to remind you that our special ends on Monday. So we have a special going right now. You sign up, you extend for 12 months, and you'll get 2 months free. And that does expire on Monday. So make sure you take advantage of that. If you're wondering where you go, on your StockCharts account, upper right-hand corner, if you click on your account there, you'll have a drop-down menu. But if you click on your account, you can actually see at the top under membership details, it'll tell you when your membership expires. If it's any time within the next 6 months, it would behoove you to extend now and get those 2 free months. All right, it's Friday, and Mary Ellen, you're back again, thankfully.
Yes, back in the saddle. Loving it.
It's been a rough saddle this week.
It's been a rough ride, no doubt. Absolutely. You talked about the volatility picking up and just everyone swaying with the latest headline.
Yeah, and it seems like when the economic reports started kicking back in earlier in the week, we had a number of different reports, even bad ones, like retail sales. I think the market actually would rather have bad economic reports than have no economic reports and focus on the trade war.
I totally agree. These trade war, what's next? Anticipation is really undoing the markets.
Yep, on every tweet.
But that's right. That's right.
Every tweet. Anyhow, we do have a lot to get over, though, today. I know we've got our regular Friday, what's hot, what's not. Can't wait to get into that. We'll certainly bring everyone up to date on what's been going on in the market this past week. Upcoming schedule, you can see I will be doing a workshop on Tuesday. And actually, that's my birthday. So I'm going to have a birthday workshop. How's that? But I'm looking forward to that. I'm not quite sure what I'll do that on. Then we're going to welcome in Larry Pesavento on Wednesday. And then Julius de Kempenaar, the creator of the RRG charts, is going to be back and joining us on Thursday of next week. Always great to have Julius on the show. So that's our upcoming schedule. But what are we going to do today? What are we going to do today? Well, of course, we're going to do the what's hot, what's not, because we've got Mary Ellen, and she is unlike anybody else. She goes to these charts in a nanosecond. So everybody needs to strap on seatbelts for that. We will get into the 10 in 10 CF Industries. Very interesting chart. I'm going to talk about that one to start off. You can take a look at it, see what you think, see if you agree with my analysis and annotations later in the show. And then we'll have 9 other stocks to annotate as well. And then we're going to wrap up today with what would you do? And note that your poll today coincides with what Mary Ellen and I will be discussing on what would you do. And it's the SMH, which is an ETF that tracks many of the stocks in the semiconductor space, and the IYT, which is the iShares of the transportation average. So those two, Mary Ellen and I will be, I don't know, putting some skin on the line in the game, something, trying to figure out whether we'd be a buyer or seller of those two ETFs. And you can participate. Tell us what you would do in the poll, whether you'd be buyers, sellers, mixture, whatever, of those two ETFs. All right, so let's get into things. We're going to start off with the economic reports. And the economic reports, actually, I thought were pretty good today. You can see on your screen there, May consumer sentiment came in way above expectations, over 100. And I think during this entire bull market that we've been in since 2009, I think that's either the 4th or the 5th consumer sentiment report that's been over 100. It doesn't happen very often. So that 102.4 reading was a really strong reading. April leading indicators did come up a little bit short. Found that a little interesting too, because one of the leading indicators, of course, is stock market performance. And keep in mind that the volatility that we hit in the stock market was in the early part of May. So it was not part of this April leading indicators. And so I don't know, maybe when the May leading indicators comes out, if keep this volatility up, maybe we'll see a bit of more disappointment. But anyhow, let's take a look and see what the Treasury market is doing with this new economic news. And you can see right here, we're still down here printing this double bottom, perhaps. We'll see whether or not it holds. As I mentioned at the top of the show, right now, this is the 7th consecutive day, if it finishes this way, or 7th out of 8 days, where we have seen a close on the yield above the open. So in other words, a lot of buying of treasuries at the beginning of the day to send the yield lower, but then there's a little bit of selling during the day in treasuries, and that is helping to fuel the stock market recovery during the day. Speaking of the stock market, let's check out some of the earnings reports that came out. We had a couple big ones last night, one big one this morning, and there you have it. You can see it on your screen. NVIDIA did come out with pretty solid numbers, beat on their top line and bottom line. Applied Materials did the same. So a couple good reports in the semis, and that doesn't seem to be lifting the group at all. Baidu just matched expectations, top and bottom line. And then Pinterest, that was their first report as a public company, and wasn't a particularly good one. You can see much larger losses than anticipated. But there on the bottom, there's Deere and Company. Another weak report. The stock broke down earlier this week, and that was just more fuel for the bear's fire, coming in with numbers that did not meet expectations. So what are we going to look at today on these charts? Well, I tell you, let me first start out. I'm going to go into the blog. I want to show you one chart that I had in my blog today, and that was under the current outlook section. And you can see this was a 60-minute chart of the NASDAQ. And so, you know, from the daily perspective, we've been kind of crazy, little volatility back and forth. I think the recent high on the NASDAQ now has been firmly established. We had a high VIX reading here and also back in late March. So I think these lows around 7,600, 7,650 have kind of marked an important territory. So now I think we're just trading in this range. But what I did notice off of this downtrend, you know, normally what you see in a downtrend is lower low, lower high, lower low, lower high, lower low, just continues. Well, at some point we go back up and we challenge those prior highs. And in this case, I'm looking at what could be on a 60-minute chart, a bottoming head and shoulder pattern, reverse head and shoulder pattern, where we went down here, put in the left shoulder, bounced, we got a neckline, came down to a lower low, which puts in the head down near a pretty important area of support as well. And then we bounced, and instead of sticking with this trend line and maybe stopping at the 50-hour moving average and turning lower, we kept going up, which is a pretty good sign to me. We haven't broken out above that prior high, but we did go up and test it. And now what I was looking for and what I talked about this morning was maybe we would go down and test this rising 20-hour EMA. If you look back, and you see the last big move up in the hourly PPO here, and then again on April 23rd, and then again here this past week. You can see that the PPO is rising, and when we have our first pullback, a lot of times you'll see that rising 20-hour EMA hold. We saw it in both of these two prior cases. So that's one of the things I was looking for today. And then the other thing is, if it didn't hold, I was hoping that the right shoulder would hold at least at the level the left shoulder held, maybe even higher. And so what has happened so far? Well, the beauty of these charts in the blogs, if you click on them, you can get the live version. So now let's see what happened with these annotations. Well, we went down, we opened just below the 20, but we came right back up above, filled the gap, even went positive for a bit. And now here we are back down again, down 39 points today on the NASDAQ, getting back closer to today's lows and possibly putting in a right shoulder. If we break below today's intraday low, I think it's probably going to set us up for another 50-point move lower on the NASDAQ, maybe to come down here around the 77.60 to 77.75 area, which would be close to another 100 points from where we are right now. That's if today's earlier lows don't hold. So that's something I would be watching for. Okay, let's take a look at some of these individual earnings that came out. NVIDIA. I'm going to pull it up on a relative chart so you can see what's been going on. We did have a nice little rally in NVIDIA in March and April, but notice not a whole lot of relative outperformance versus its peers. And then as soon as the group got weak, NVIDIA went right down with it and moved to a new relative low over here. So this is not really looking good. I think with earnings out, kind of hoping earnings would be a catalyst to get NVIDIA moving again. That has not been the case. So I personally don't like it at this point. I'd stay away from NVIDIA. Applied Materials, on the other hand, I think did react pretty nicely. Volume already today, almost 12 million shares. So we're likely on a pace to do maybe 25 million shares, maybe even more. And when you look back, you'll see that that is one of the heaviest. This could be the heaviest volume day of 2019. So we're getting nice volume. We're moving back above the moving averages. And unlike NVIDIA, we are breaking to a 7, 8, maybe 9-month relative high on Applied Materials relative to the semiconductor group. So unless we get a big reversal, I actually think Applied Materials is starting to look pretty good here. Watch that 20-day moving average on a pullback. If that holds and we move to a new high, I think that would begin to confirm that we've got maybe a new leader emerging in that semi space. Keep an eye on Applied Materials. Baidu came in with their earnings last night. Not good. And you know what? Looking at the relative strength of Baidu versus the internet stocks, you really shouldn't have been expecting much out of this stock coming forward with its earnings. And they simply matched expectations on top and bottom line. They guided their Q2 revenues lower. And then they do what, when you don't have anything else to reach for, you don't have any other good news, they do what most companies do that have cash. They announced $1 billion share repurchase plan, or an additional, I believe, or maybe it was the original. I'm not sure. I'd have to follow up on that. But 1 billion share repurchase, and you can see market not impressed by that announcement. Further unimpressed by the fact that this company has been lagging for so long and still doesn't seem like there's a light at the end of the tunnel just yet. Pinterest. Pinterest gapping down with its earnings, trying to hold on to that recent support. I don't know if it can continue with this hollow candle. Today's open, I think, is important. And that resistance is established up at about 35. Last individual stock, I do want to take look at a couple industries, but Deere not performing well. This was the multiple months of support I was talking about at the open, right around this 155 level. We gapped below it on Monday, and we have continued moving lower. And now the earnings come out, not good. And this is why this industry group, has been such a weak performer. Deere, until recently, maybe back in February, but it was kind of holding up okay on a relative basis. But the overall group now has had too much weight, putting too much weight on its shoulders, comes out with numbers. They guided their fiscal year revenues lower in fiscal year 19 revenues lower. They cited softening conditions in the agricultural sector. Not good. Two groups I just want to pull up real quick. One is the I mentioned them at the very open, the mobile telecommunications group. I like the fact that this group is moving back up to about a 1 month high, getting back above the moving averages, certainly seeing some strength here. And then the other one that I wanted to mention was footwear. Footwear I've got a little bit more problem with because we still got to get through the 20. We got overhead gap resistance, got a lot of things still working here. Good news is so far 1500 is holding. If we lose 1500, footwear could be losing its grip on being one of the better relative performing industries. So keep an eye on that 1500 level on footwear. All right, upgrades, downgrades. Mary Ellen, what you got?
Yeah, so today, interestingly, we have a lot more in the way of upgrades. Usually it's quite the opposite. So let's go ahead and get started with those upgrades. The first one that we have is Walmart. And here we are looking at a daily price chart. And the stock has been holding in remarkably well. I have some simple moving averages, the 10-day simple moving average, green line, red, 50-day simple moving average. We can see the stock's been holding in, finding support at that upward trending 50-day simple moving average. We're not getting a really big boost from today's upgrade, but we can see the RSI is positive, as is the MACD. Let's take a look. Tom talked about Applied Materials coming in with some good numbers today, and following subsequent to that release, analysts came out and upgraded the stock.
Hey, Mary.
And
I'm sorry, I'm not seeing your chart.
Okay, let me go ahead and share the screen, and then what we'll do is go ahead and take a quick peek back again at Walmart, and we'll move right on. And that should do it. So now we are looking at Applied Material. We talked about the company coming out with good numbers. It gaps up almost 5% after pulling back to that 200-day simple moving average. The stock is looking constructive. Let's go ahead and take a quick peek up here at Walmart and give you a glance at what I was seeing as far as the stock finding support at this upward trending 50-day simple moving average. Let's move on. Another retailer was upgraded today, and that is Foot Locker. And we can see that this is a stock that really has fallen out of favor here recently. And even with the upgrade today, it's just getting a very modest bounce. The stock still looks technically not very sound. We can see the MACD is down below that net neutral. RSI is negative. Stock's below any key simple moving averages, so not very constructive. The next one that we can look at is Philip Morris. If we can get the ticker symbol here, PM. And this particular stock did get an upgrade, and it is having a nice bounce. It could theoretically come out of this base here. The RSI is now trending upward. Your MACD is a bit neutral, but poised to trend upward. So if we get a more convincing break up above that 50, we could see a nice rally on Philip Morris. CINF is a bank stock, Cincinnati Financial. Actually, this is an insurance company, and they had a huge gap up here on strong earnings. It's continuing to find this upward momentum, and despite the high valuation, the stock got another upgrade today. It's up another 1%, but very much in a confirmed uptrend. We can take a look at TXRH. This is a restaurant stock, totally down and out. The stock is up about 3.5% today on the news, but very much in a downtrend. Nothing worth noting. Both your RSI and your MACD are very much in negative territory, so would not be impressed or take a look at that. Another retailer or apparel manufacturer is Under Armour UA. And the stock gapped up almost 7% on the upgrade today. We can see that that pushed your other technical indicators into positive territory. We do still have work to do as far as overcoming overhead supply here, but it certainly is a positive move for the stock. And then UTHR is another upgrade that we can take a quick look at. It's United Therapeutics. Totally down and out stock. It is bouncing on the upgrade, but this downtrend is just very firmly in place. Would not even take a look at that. We have time for one other upgrade, and then I'll move on. Another down and out stock, Grainger, GWW. really trying to reverse it, but has far too much work to do. On the downgrade side, we can take a quick look at Baidu. The company is down 15% on poor earnings. The stock that does not look very constructive. And this is Copart, CPRT, downgraded. It's kind of waffling as far as position-wise, still hanging in there in positive territory. We talked about NVIDIA earlier. I'll just take a look at one last stock on the downgrade side. This is Hain Celestial, Hain, a consumer staple stock. And we can see that despite the downgrade and the move down, the stock is finding support at this upward trending 10-day simple moving average. So you're still in good standing as far as this potential breakout of this base. So that's it for upgrades and downgrades today. Let's go ahead and we can move right into what's hot and what's not. And it's certainly been a very interesting week, some might say, as far as starting out. Very, very weak. The markets got hit quite hard, but there have been really some interesting bright spots. And as we get into it, I'll explain why. This first area that we are going to take a look at are software stocks. And I'm going to begin by showing you a software ETF. And that is going to give you a little bit of a sense of where we've been with software stocks and where we could potentially be heading. So if we take a look, this is the bottom in the markets. Yes.
I just want to make sure you grab that screen again.
Okay, I can do that. But I can also talk about some of the dynamics certainly in the markets as far as software stocks. And when we see the chart, it will make sense. It's been an area of the markets of superior performance and definite outperformance. So we're looking at IGV. This is the tech software ETF, one of several software ETFs, but it really does demonstrate this superior strength that we've seen in software stocks. In other words, they've been a leading industry group. And so more recently, they did fall out of favor. They peaked in the beginning of May. And what I like here is the fact that this is a daily chart over the last week. We've seen significant money flows back into these software stocks. So you like to see money flowing back into leadership areas. So let's go ahead and take a quick look at some of the leading stocks in this leading group. And by that, I'm going to point us toward not only outperformers, but those that are really participating this week. IGV is up less than 1%, but the stocks we're going to be looking at are up 6, 5, 4%, and so forth. This is Twilio. These guys provide software. One of their biggest clients is Uber. So the stock pulled back earlier in the week because Uber's IPO came out, really fell apart, and they took down Twilio as well. But since then, the stock has rebounded quite nicely, and it's poised to break out of this base. That RSI is trending upward. We can see we had this positive black line up through the red on the MACD. So very, very constructive. It's a little bit extended, but the stock looks poised to trade higher. This next one is CYBR. This is a cyber security software stock. Company came out with nice numbers. This is another one that pulled back in line with the industry grouping, but found support at this upward trending 50-day and is now advancing. The stock is up about 5% for the week. We can see the RSI is positive. MACD is up here above this net neutral zero in positive territory. Would like to see that black line cross up through the red. But at the end of the day, this is clearly a leadership name that is finding its footing again following strong earnings. VEEV is another stock within software. Really didn't get hit with the downdraft that we've seen in other names, continues to find support at this upward trending 10-day simple moving average. RSI is positive, as is the MACD. All of these are stocks that we picked up at MEM Investment Research. They are all have been on our suggested holdings list, so quite familiar with a lot of these names. EA is another software stock. This is in the gaming industry, and it's not as much of a leadership name. So I did want to point out to you the difference, because EA, while it is having a nice bounce this week, it's up about 5%. We can see that your simple moving average, this is your 200-day, is very much in a downtrend. Despite having a positive RSI, MACD is not quite up there above that net neutral zero, but at the end of the day, we will need to see this price break up above that 200-day simple moving average with an eye toward eventually turning all of these simple moving averages upward. We're super close. The stock is very close to reversing this downtrend. We can take a look at ATVI, which is another gaming software stock, very similar, but not quite as healthy looking, because it has a lot more in the way of work to do to potentially reverse this downtrend. And then one last one we can look at here is Autodesk, ADSK. And this is another one from our suggested holdings list with MEM Edge. But more importantly, what I want to point out to you is it pulled back in line with the industry grouping, bounced off of that, and we can see that it is very close to breaking out to a new high in price, also breaking out of this base. RSI is positive, MACD up here above zero and poised to have that positive crossover. So this is another one that would be in that leadership space. So let's go ahead and I'll take a minute and take a look at some of these consumer staple stocks that are very much outperforming this week. The first one that we can look at is TSN, Tyson Foods. Take a look at this uptrend, and it has everything to do with very positive dynamics as far as pricing in the chicken industry. The stock was upgraded this week because in China there was an outbreak of the swine fever that has taken out 35% of their pig herds over there, and they're thinking that products such as chicken products will replace it. But this stock has been a real true winner. We can take a look at another consumer staple, Procter and Gamble, and it's really holding up well at an upward trending 10-day simple moving average. The RSI is positive, as is the MACD. This particular stock does yield 2.8%. Tyson yields 3.5%. And I have time just to get to one of these financial stocks. We'll take a quick look at PayPal, and we'll then hand it over to Tom. But this is one of those payment processing companies. It's an area of the market that has been really quite strong. There is a lot of innovation that is occurring within this space. So take a look at PayPal. The stock is up about 3% this week, breaking out to new highs. Their latest innovation is their cash Venmo, it's called, where you can share cash with others using it on your app. So I'm going to leave it at that, Tom.
All righty. I'm going to just pull that PayPal up for you. Actually, can you see my screen?
No.
No. If you don't mind, just actually, let me try something else. Okay. You got it now?
I can see it.
Okay, there we go. All right, I just wanted to bring up PayPal because this is something I talk about. And I mentioned yesterday on the show, I think it was yesterday, that PayPal was one of my favorites in this space. So I'm glad you brought it up. But this one is one you can just look at. And so you got financial administration stocks outperforming the S&P 500 by a mile. You've got PayPal breaking out to a new relative high versus the group. So you already know the group is strong. And now with PayPal, you've got one of the stronger stocks. Here it is making another breakout. It's made a huge move. I do expect some consolidation at some point, but this is a stock, obviously, that Wall Street loves. And when Wall Street loves a stock, I tend to like it as well because there's a lot of money on Wall Street to help drive the prices a little bit higher. So I just wanted to mention that. But I'm going to get into, on the what's hot side, I'm going to look at some of the real estate stocks. And before I even get into that, though, I want to show you, if we go back and look at the sector summary, just for those of you who may not know, you can do this. You go to the sector summary, and then the period, just change it to 1 week. And this will tell you what's been leading and what's been lagging the market here over the past week. So clearly we've seen utilities up there, and real estate has been another one of the defensive groups, consumer staples as well. These three groups have been leading over the last week. So if the market continues pushing higher, I'd actually like to see this change. I'd like to see some of the more aggressive groups lead for a period of time, but I'm going to focus on the real estate group. So first, within the real estate holding and development area, look at innovative industrial properties. Now, this is a stock that normally trades a few 100,000 shares a day, probably not on too many folks' radar. And as far as I'm concerned, this one is hitting resistance. So you might want to wait and see if you can get a pullback a little bit. But that's a pretty big area of resistance, a top that was set back in March. And remember, that's when the market was selling off. So when the overall market was selling off at the end of March, real estate, a lot of the money was rotating into some of these defensive areas, and stocks like IIPR did very well because of it. Then as the market started to recover, some of this money moved back away from real estate and so forth. But now in May, we've seen the volatility pick back up again. The stock has been in favor. Volumes picked up a little bit, but it is challenging some overhead resistance. We'll see whether or not we can break through there. Next up is HHC, another stock within this same space. So HHC, another really good move. The problem on this one is it did have a huge move down, and then we get the recovery. You can see all of these tests up here between, well, really close to about 113. It's between the 112 and 114 level. And look where we were yesterday. We went right up to that 113 level, and now one day later we're back at 109. Anytime I see a stock miss that many times at a resistance level, you want to respect it. I'd be a seller at that level until we can get through. To the downside, watch the 104 area. Another stock in this space, INVH. All right, INVH continuing to move higher. Really nice bounce off the 20-day moving average. Had a solid week, moved up a couple percent while the overall market has struggled. The breakout to a new high, I think that speaks volumes. Then we're going to move to the specialty REITs. Specialty REITs had a nice week, and look at Healthcare Realty Trust. Beautiful move to the upside, but this one very similar to IIPR, that real estate holding company I talked about. This one's got some overhead resistance around 32.25. We have been above 32 the last 2 days, so I'd look for maybe a little bit of sideways action, but the volume has picked up on this move to the upside, so a lot of interest here in HCP. HCP moving higher here, challenging overhead resistance as well, so another one that's had a good solid week, but you do have to respect that resistance until we can establish new highs above it. Welltower, WELL, breaking out, already getting through that March high. So we're seeing some nice relative strength on Welltower, both the relative chart here. And you can see versus its peers, it's actually accelerating again here over the past 3 or 4 weeks. And this is a stock, it's in the defensive area, but it's performed very well versus the S&P 500, and its group has performed very well versus the S&P 500. So sometimes you do find nice, solid bullish nuggets, even in defensive areas like real estate. Welltower has been a great performer and is breaking out again. VTR, this is Ventas, another one just making a breakout above all these tops. Volume so-so on this push to the upside. Like to see a little bit more volume coming in, but it too has started to strengthen on a relative basis, which is very helpful. And the last one in the specialty retail group is AMT, American Tower. After sideways consolidating, testing the 50-day, we have just broken out again. This one did show an acceleration of volume on the breakout. I think that's good. One last stock that I want to mention in the what's hot in the personal products area. So sticking with that defensive theme, this is e.l.f. Beauty Products. Stock had gapped down last week, but this week has rallied back off of it. So last Thursday was the gap down. This week it has moved up, I don't know, maybe about 5% or so. But I'm a little nervous about this one because on a relative basis, it was strengthening. It's kind of rolled over a little bit. The volume here, the move down, you can see that volume accompany that big gap down. We could just be filling this gap before rolling back over. So this one, even though it's been hot this week, I think you got to be a little bit careful here. All right, let's wrap up our What's Hot segment. Mary Ellen, I know you got some more.
I do, and this time I'm going to take the screen so I can share it with everyone.
Great.
Yeah, it'd be swell. So the first one, we're going to take a look at some of these medical products stocks. And despite the downdraft in overall healthcare stocks, this has remained a bright spot. So the first name that we are looking at here is Tandem, TNDM, Diabetics Care. And you can't really tell, but the stock is up 5%. And this particular stock really is a turnaround story. We can see that it came, actually, it was a very, very big winner here last year. It was one of the best performing stocks, sold off with the markets, but now more recently it pulled back again, and it's potentially forming the right side of the space with an eye toward breaking out. This is a weekly view. The RSI is positive. Your MACD is also up there in positive territory. Let's take a look, because the next company really looks interesting. It's Harmonics. I'm going to go ahead and pull up the daily on this. Now, the reason I find this stock so attractive, first of all, it really has not participated in the rally at all that's occurred within the broader markets, but more recently, it is potentially reversing this downtrend. I like the fact that it's broken back up above this 200-day. The 10-day is poised to cross above that 200 Golden Cross. RSI and MACD are positive. They reported very strong earnings last week, so look for a continuation of that uptrend. Another healthcare, actually medical products company is Masimo. MASI is the ticker symbol, and we can see it's had a nice significant advance here. This week they did get FDA clearance on a top medical product. In addition to 2 weeks ago right here, the company reported very strong earnings. So now we are in a clear-cut uptrend above that 10-day simple moving average. Another medical products, this is Align Technology. They do the Invisalign. That's their primary product, but they've also branched out into other areas where they also are providing financing for the product. They are doing a global push. This is another turnaround, and the stock does appear to be in a confirmed uptrend. Let's move on to another area in the markets, and that is home builders. And a lot of these stocks have been doing quite well. We're going to start with Lennar Corp. And what I wanted to mention is that U.S. housing starts came in better than expected this week. Sales of new home came in at the highest level since November 2017, and home builders' confidence is at its highest level in 7 months. So we have very strong headwinds behind these stocks with the low interest rate environment and an expanding economy. So Lennar is the first one we can take a look at. It's up 3.5%. And the stock is hitting a near-term high in price. It's a little bit extended. I would look for a pullback, but we can see that the RSI and the MACD are trending upward. Let's take a look at another home builder here, and that is MHO is the ticker symbol. And we can see that the stock here is breaking out of this longer term 2.5 month base. Very constructive. MACD, RSI are both positive. KBH, we can also take a look at. This is another major home builder, and it's KB Homes. The stock gapped up here. They were upgraded to an outperformed by RBC. And again, citing those very same characteristics that I mentioned before, the RSI is trending upward as well as this MACD. So we can see it's in very good standing. One other home builder that we can take a look at. This is a smaller company, regional LGIH, and the stock was able to regain its footing, if you will, following a pullback. It undercut this 50-day simple moving average on volume, but buyers came in and bought on the dip. That's very, very constructive. Subsequent to that, it's been in an uptrend. We can see the RSI and the MACD are also positive. Let's just take a minute here. One last group we can take a look at, and that is rail stocks, and specifically, it is Canadian rail stocks. And the reason is because just yesterday they came out with rail volumes, and the Canadian rail volumes rose again while U.S. volumes continue to downtrend. But we can see that the stock is very nicely poised to break out of this 3-week base with your RSI, your MACD poised to have that black line cross up through the red. We can take a look at one other name, NSC, but again, these Canadian rails are benefiting from good numbers as far as volume traffic. So we can see this stock is also poised to break out of a base, and your RSI is positive, and your MACD is up here above this 0, poised for that positive crossover. Tom, I think you have some what's not?
Yeah, I'm going to go into the what's not. I'm going to start us off here. And one of the things you have to pay attention to, and I got a lot of this from John Murphy looking at intermarket relationships. But anytime you're interested in stocks that are interest rate sensitive, you want to pay attention to those interest rates. You want to pay attention to what's going on. I just wanted, before I get into life insurance companies, which did have a down week this week, I just wanted to show you the relationship of the relative strength of life insurance to the S&P 500 and how that correlates to the direction of the 10-year Treasury yield. Down here at the bottom, you can see any reading above 0 means that you have a positive correlation. Any reading at 1 plus 1 means you have an exact positive correlation, meaning they're going hand in hand in the same direction. Now, when you get into the negative correlation, it means they're going opposite. You can see that the relative strength of life insurance versus the S&P 500 very rarely moves opposite the direction of the 10-year Treasury yield. That's what these readings down here tell us. Now, right now, that's what's been happening. We actually have an inverse correlation, which we have only seen to this degree maybe 2 or 3 other times over the last 5 years. And so when you look at the life insurance group, it's been going up versus the S&P 500 for the last 6 weeks. And one of the things I wrote about in my blog, I think it was just a day or two ago, I talked about, are the financials relative to the S&P 500 going to roll back over? And this is one of the things that I'm looking at. If the yield keeps moving lower, if we fail to hold that 2.36% level on the 10-year Treasury yield, life insurance companies are likely to start taking a hit. And so far, that's what we've been seeing this week. We have with the 10-year Treasury yield going back down to 2.36%, life insurance has been one of the underperformers in that financial space. And one of the stocks that I want to pull up in that space is Genworth, GNW. So Genworth Financial, after gapping down, moving lower back in February, we had a bear flag. Well, this week on Monday in particular, we broke down out of that to the downside, clearing the March low. And so it has just not been a very good week for GNW and for life insurance in general. I mean, take a look at this chart. I mean, we're going back almost a year to get back to these lows on GNW. And so look at the stock relative to the life insurance group. You definitely don't want weak stocks relative to life insurance when the 10-year Treasury yield is dropping. That is not going to usually result in too many good things. A couple other stocks in this space, ING Group. You can see also big move down here over the past few weeks. Relative strength moving to a 52-week low. Not what you want to see. Unum Group, UNM. This one's been a little bit better on a relative basis. Not down at its December low, but still tracking lower, moving back down, having a rough week. We gapped down on Monday. We really have struggled to hold above that level. And then the last one I have in this space is Prudential, PRU, which also is now down below its 20-day moving average with the 10-year Treasury yield dropping. Prudential was actually breaking to new relative highs, 52-week relative highs versus its life insurance peers before this month. So the heavy volume has kicked in. I would feel better about the stock if it can get back up above its 20-day moving average. But as long as it continues to trend lower and the 10-year Treasury yield fails to bounce significantly off that 2.36% level, I think you want to be careful with Prudential and all these life insurance companies. Last two I have, these are in the heavy machinery area. PWR, huge move down. Look at the volume coming in on this. Check out the relative strength, which was pretty good about 2 weeks ago. Completely falling apart. The group is falling apart. I think this is an area that for whatever reason, maybe it's China, trade war related, but this stock and the group has really taken a hit here in May. And I don't like to ignore those kinds of signals. And then also GVA, which is Granite Construction, breaking to multi-month lows or testing multi-month lows. Another one on a relative basis that has been underperforming. So when you're in some of these groups that are not exactly lighting the world on fire, it's one thing to be in software, which has been a great group. That's been a group that's been, the rising tides lifted a lot of boats. Even software companies that haven't performed well versus their peers are still going up because money is rotating into software. When you get into some of these other groups where you don't have the money rotating in, you definitely do not want these laggards, these relative laggards. And GVA, PWR are just two examples of that. So I know you've got a number of what's not stocks. Mary Ellen, take it away.
We do, yes. Unfortunately, given the current market dynamics, there have been definite pockets of weakness out there. So we'll go ahead and take a look at some of the hardest hit areas this week and kind of drill into as to why. The first name that we're looking at, we're going to take a look at several of these retailers. This is Target, TGT, and we can see that it's been in a downtrend here. This first gap down here was in response to news that Amazon was going to have 1-day Prime delivery service. Target already was offering 1 day, but the competition appeared too stiff. Analysts lowered estimates. And then more recently, we can see a continued drop. And a lot of this has to do with tariff related. A lot of these retailers got hit. They import a number of goods from China. So there's anticipation that they could continue to see some downside. Couple of jewelry related stocks. Tiffany, of course, very well known. This is also China tariff related. We can see this gap down here on Monday. The stock has not been able to recover while some of the other related stocks have. The RSI is negative and your MACD is now going into this negative territory. Once it breaks that 50-day, all bets are off and continued downside could very well be in its future. Let's take a look at one other. This had already been down quite a bit. Another jewelry related stock, super downtrend, just cannot get out of its own way. The stock is dropping, plunging again now. We can take a look at a primarily watch company. They're moving out into other product areas, but this is Fossil, FOSL, really just heavy downtrend. Cannot seem to had an attempt at reversal here on strong earnings, but has since receded back into that downtrend. Let's go ahead and move on to another area in retail and a couple of restaurant stocks that are well known that got hit this week. This is Papa John's, and the stock is down quite a bit. And some of you may recall, this company came into trouble with the CEO, and the board of directors took over the company, and they did bring on Shaquille O'Neal, which this is that rally here, but more recently it has fallen out of favor again. The stock has now broken below this 50-day simple moving average on big volume. Your RSI and your MACD are both in negative territory. One other restaurant stock that we can take a look at is called Dave and Buster's, PLAY. It's the Chuck E. Cheese, if you will, for adults. They have a lot of games and so forth, but also it's a full-service restaurant. And we can see that this particular stock is pulling back. After this failed breakout, the stock attempted to break out of this base here. It did fail. Analysts are lowering estimates for next year. We can see the stock is breaking below this 200-day simple moving average in a negative action. It's trying to bounce a bit today. We'll see how it closes, but your RSI is trending negatively. Your MACD down below had that negative crossover, black line down through the red, poised to turn negative. A couple of other areas that are trade related. Industrials. We'll take a look at a couple of these big industrial stocks that stand to be very negatively impacted with the trade war. Tom talked about this company earlier. This is Deere. They did come out with their very soft numbers today, but they already were in a declining phase because of tariff tensions. The earnings only put the nail in the coffin, so to speak. They had an 11%. They're actually down more than 11% for the week. The company came out and they dropped their expectations, their profit expectations going forward. And then one other stock that's in the same group as Deere with their farm equipment is LNN. Take a look at this huge gap down and drop. Stock is very much in a downtrend. One last area that we cannot leave without addressing, and that is semiconductor stocks. And for those of you that follow the markets closely, you may very well be aware of the fact that semiconductor stocks have been getting hit because of these trade tensions, trade war fears. We're looking at the semiconductor ETF, and you can see this decline that had already been preceding this week. Now, this week's drop, while it is trade tension related, it also has a lot to do with President Trump's decision to curb, there's a Chinese firm, Huawei Technologies, and they are now on the, what you might say is the do not trade. It's called the entity list, and a lot of U.S. semiconductor companies provide products to this Huawei, and they are getting hit. Let's take a look at one of the bigger HLNX, and this stock already had been in a downtrend. This is all about earnings that disappointed, but we can see the stock is in even more of a downtrend following Trump's actions as far as restricting trade for one of the largest, they actually are the largest customer for a number of large semiconductor companies that are in the U.S. We can also take a look at Qualcomm. That was impacted negatively. The stock traded down, but it's certainly not as negative looking as Xilinx. The stock is down about 5% on the week. It's broken now down below this 10-day simple moving average, but Qualcomm still is in positive territory with that RSI. We had a negative MACD crossover, but it is still also in positive territory, one of the better ones as far as standing. We're going to get into some of these semiconductors a bit later when we review what would you do. But Qorvo, QRVO, is another company that stands to be greatly impacted. About 10% of their sales are to the Chinese Huawei company, and we can see it's down about 10%. When you see this type of big volume on yesterday's big gap down, a break below this 200-day simple moving average, very, very negative, indicates institutions want out. Another secondary gap down today, so not very good. SWKS is another supplier that was negatively impacted. We can take a very quick look at this particular semiconductor stock. And with these, of course, we are looking at daily price charts. And this is another one that got hit in the downdraft on trade tensions. Then this week, with Trump's moving of the citing national security concerns and moving Huawei onto its entity list, we can see the stock is continuing to just gap down again and again. So very much in negative territory. We have these negative shorter term simple moving averages now breaking down below longer term in a negative fashion. So I'm going to go ahead and leave it at that. Tom, if you want to go ahead and we can mix it up a little, move on.
Yeah, we'll go ahead and bring up our summary slide first, just to let everybody know some of what we covered. And you can see on your screen there that we covered a lot. I mean, there was a lot of stocks, a lot of movement back and forth. And, you know, this was kind of a crazy week because, you know, normally throughout 2019 anyway, we've had weeks that have either been up or they've been down, mostly up. And then this week we started down, we rallied back, and then today we're, you know, kind of going back and forth. But we were down so much on Monday that many of these stocks, like you said, the semiconductors, some of the other industrials really haven't made much headway coming back up. So there was a lot to choose from on both sides of the spectrum.
No doubt. A lot of cross currents.
Yep. So, all right, we're going to jump into the 10 in 10. I want to make sure, first of all, that my screen has come across. You got this one, CF, Mary Ellen?
Yes, CF is the first one.
All right, and it is up on the screen, hopefully. All right. Okay. CF. All right, I said earlier at the beginning of the program, this one I thought was an interesting chart, and I'll show you why. So, first of all, it went into a downtrend, and you can see really has not recovered during 2019. Its group in the chemical commodities area, or specialty chemicals, I'm not sure. Anyway, has done really well here over the last 4 or 5 months. We did pull back, let's say, over the past 4 weeks, but when you see the group moving up like this, the peers, and the stock can't make new highs, that without even looking, I can tell you that the relative strength is horrible. So it didn't look very good. But then when the group broke down, CF continued to trade in this trading range and hasn't broken down. So now the group is going down and the relative strength is going up. So I think really what this is telling me more than anything is I want to focus on this trading range. Just to understand that this is an area of the market right now that has just broken to a new 52-week low. So if CF breaks down below, say, 38.5, 38.75, I want no parts of it. I mean, honestly, with it at $43, I think there's so many better areas to be. I wouldn't be in the stock. But definitely, I mean, if you're a longer term holder and you just want to make sure it doesn't break down below a key level, I'd be using the low that we saw back in March. We had a double bottom that came in here. We came all the way back up. Usually when you get a double bottom and you break back up above that high that's in between them, usually that's a good thing. And it was for about 2 days. And then we couldn't get through the overhead resistance, the gap resistance. And so this one just continues to sideways consolidate, which is very frustrating in a market that has gone mostly higher. So I would avoid CF. But again, longer term, let's see which one of these levels gives way first. Is it going to be the move to that downside below 38.50, or are we going to break above 45.25? I'm not sure, but that's what I'd be watching.
Very good. The next one is a defense-related stock. It looks pretty constructive. AJRD, smaller name.
Yeah, I really like the defense stocks. I think this is a group that has been building in strength. You can see even in May, we've continued moving higher when the market didn't. And so the relative strength is moving up. And just earlier this week on Monday, we set a new relative high dating back to the last 6.5, 7 months. So I think that is very constructive. I think the group is definitely on the move to the upside. I think there are better names in the space. I really like Lockheed Martin. And I will tell you right now, I own it, full disclosure. But I like Lockheed Martin. It's one of the better relative performers. This one's doing okay. I'm not upset with it, but it's not breaking out. I think the gap support at 36, I really like the bounce off of that 20-day moving average. So I would simply draw this line in right here. And if it breaks below, I would just rather be in something else within the defense area. I want this price support level to hold, and I want this recent relative strength to continue. I want to see it turn higher here in this. Otherwise, I'd rather be in another defense stock. But I'm not upset with it. I think it's in an improving group in defense. The stock got a nice gap up with earnings. Let's just see if it holds this 36 level. It should hold.
Very good. Then we have a semiconductor stock, DIOD. A little bit of a...
Most of these semis, I'm not, the whole group's taken a turn, and many of them have fallen apart. There were some I liked recently. Microchip was one of them, kind of fell apart. I just think you got to keep your stops in play when they don't work out. This one, you can see relative to the semis, got a little bit of a pop in May, early May, over maybe 1 or 2 days. But for the most part, it has been trending lower while the group was going higher. I think you've got a downtrend in play. Look at that false breakout right there. That is definitely not what you want to see if you own the stock, where it looks like it's making a breakout intraday and then fails by the close on this kind of volume. I could have almost, well, I don't guarantee anything, but it would have been high probability for me that we were going to see weakness after that false breakout. I believe this is a really key area. We've now had since breaking out with increasing volume in early February, we've had 2 tests of about 34.5. We've had a couple other moves down close to that level. A close below 34.5 on heavy volume in a group that's not performing well would be enough to take me out of the stock. So I'd watch it closely.
Very good. Next one is Paychex, PAYX. It's a stair step to heaven.
Yeah, those are always nice. Yeah, I mean, and you can't really say too much bad about it. I mean, it's got a lot of good stuff priced in. We'll see a pullback at some point, but this is exactly what I like to look for. If I'm going to get into a stock, I like stocks that have this kind of behavior. Outperforming, the group outperforms the S&P, and might as well just annotate. I like to do maybe one of these a day if there's a really good one to annotate. But anytime you get a stock that is, or a group that's moving up versus the S&P, the stock is moving up versus the S&P, the stock is moving up versus its peers. The peers are just moving up on an absolute basis. The stock is moving up. When you see the blue arrows, directional lines all moving in that direction on this chart, you've got a good stock, and there's a good chance you're going to outperform the S&P 500 until the chart tells you to think about something else, a character change, a breakdown below the 50-day, heavy volume, something. Until that happens, I'm bullish, so I would stick with it. I like the stock. I like Paychex.
Very good. Next one is the Tiffany. We took a little peek at that earlier.
All right. Yeah, rolling back over again. Specialty retailers have been going up. Look at what this stock has been doing relative to its peers. That's why I would rather own one of its peers. It's been a good group. The group rallied back in January. It's held up pretty well. Last, here in May, it definitely has taken a little bit of a hit, but it held on to this reaction low, relative low from back in January. I think as long as that holds, it's okay. But I just don't want Tiffany because I don't want one of the worst performers in the group. I want one of the better performers in the group. So annotating this one, clearly the main thing for me is going to be this line right here, which at this point is still suspect. No reason for this to be rolling back over again, not performing well. I think also I could point to the loss of the 50-day moving average here. Now the 20 crossing below the 50. That's not what you want in an uptrending stock, and that's not what happens in an uptrending stock. So for those reasons, I would pass on Tiffany's. Look for something else in the specialty retail group.
Very good. Next one is Molson Coors. TAP is the ticker symbol.
Well, it's Friday, so it's a good day to maybe look at Coors. It's 5 o'clock somewhere, right?
That's right.
Yeah, I mean, for the most part, it is the group. As you can see, there's not a whole lot of, and that's probably maybe dividend related or something. When it looks like quarterly, we get this one spike. Yeah, I mean, looking at the stock, again, we've got a market that's been very strong in 2019. TAP is part of the defensive area. It's part of consumer staples. When I believe we're in a bull market, which I believe we're in a secular bull market, I typically look in 5 industry groups for almost all of my trades: technology, financials, industrials, communication services, and consumer discretionary. Those are the 5 groups. And so if I get stocks outside of that range or outside of those areas, it's got to be a leader. It's got to be a stock that's really performing well. I don't see that here with Molson Coors. So I don't know what their dividend yield is, but maybe if you're a dividend player or you're an income investor, that, maybe that would work better over the longer term. But again, you're underperforming the S&P mostly over the last year. I'm trying to outperform the S&P 500. I'm going to find it very difficult to do that in a stock like TAP. So for that reason, I am going to pass. I think over the last few months, here's a little trading range maybe to watch, see which way it breaks. If it goes back down below these lows we saw earlier this week, I would not be a fan at all.
Very good. And it does have a 2.8% yield. The next one is Columbia Sportswear, COLM, another one in the crosshairs of tariffs.
Yeah, this one had looked really good. I liked this stock back in February. If this move up after sideways consolidation, it should have held right here, and it did for a few weeks, and then kind of went below. You can just see it just starting to deteriorate. Look at the volume pickup as it broke down and failed to hold these lows. Now it's gone down, and I think the key now is just whether or not it holds the bottom of gap support. But when you're looking at the relative strength, that's not good. But there's the bottom of gap support. We almost tested it, rallied off of it, and now look at the failure that we're seeing so far on this 20-day moving average. That is not a good candle. I don't like a tail that goes up above the 20 and then comes back down below. I think we're in this range right now, 92 to 98. Let's see which way breaks first.
Okay, and then we have O'Reilly Automotive, ORLY. Little earnings-related downdraft there.
Yeah, and I think this group, there've been some talk about tariffs on auto parts and blah, blah. I think that's also weighing on the group. But O'Reilly, after gapping down, you can see the heavy volume back in April. I think that was the earnings-related gap down, wasn't it, Mary Ellen?
Yeah, actually, that took place, at the end of April.
Yep. So there's your earnings-related gap down. And remember, I was talking about character changes on charts. When I'm in an uptrend, I break out of a nice, sideways consolidation, and I'm looking to go higher. And then all of a sudden, heavy volume, I move back below my moving averages. Can't move any higher and simply start trending below the 20-day, which crosses below the 50. That's what I mean by a character change. Maybe it doesn't all happen in one day, but it is definitely happening. I'm not interested right now. It's underperforming. Again, if I pull up the relative chart here, you can see versus the specialty retail group, it topped 5 months ago and is now at a low that we haven't seen in about 7 or 8 months. That's not what I want to own. So heavy volume, breaking down, character change, negative relative strength, I'm going to pass.
All righty. Last one is Biggie Caterpillar, CAT.
Yeah, Caterpillar, Deere, same kind of problems right here. Deere, I showed you their breakdown below multi-month lows. We have basically the same thing on Caterpillar early this week. Caterpillar relative to its peers trading near a 52-week low. The group is approaching a 52-week low. It's really going to be difficult for me to come up with anything here that would interest me. Again, I'm trying to outperform the S&P 500. I need to see an uptrend. I need to begin to see some relative strength. I really don't see either one here. There was a recent low there. I guess the next one is going to be right here. That's about where we are today. I mean, I can draw all these lines, all you want. And, where it's going to turn, if it's going to turn, I have no idea. But what I do know is that Wall Street is not a fan right now of Caterpillar and its peers. And if Wall Street's not a fan, I'm not a fan. I'm a momentum trader, and I'm on the long side. I don't want to be trading stocks on the long side that are downtrending. So not a fan of Caterpillar. I would pass. And is that it? I guess
that's it. You did a great job.
Got through them. Okay, there are your 10 and 10 symbols. Actually, there are only 9 of them on there. So I think maybe there was one more. But anyhow, maybe I'll check it out in the blog later. If there's a 10th one, I'll add one, and we'll make sure we get it into the blog for you. You can check out the annotation later. But I do enjoy doing these 10 and 10s. We get a lot of positive feedback. And while analyzing the stock is part of what we're doing, I also want you to know how easy it is to annotate these charts and to save them into a chart list. That's part of what being a member at StockCharts is all about, organizing your trades and, I think it's going to help in terms of just being a better trader. I know for me, I couldn't trade anymore without StockCharts. I just couldn't. There's too many things that I set up and organize, my strong earnings chart list, the scans that I use, having all of these annotations. I don't use the alerts, but I know a lot of folks that do, and those are powerful. I'm usually looking at the market all day, but somebody who's not, use the alert service. My goodness, it'll tell you if a stock's going below a 20-day moving average or below a price support level. You'll get those notifications by email. So, great service. Anyhow. All right. Let's go ahead. And before we get into the market update, I want to show you the special because I just told you what a great service that StockCharts offers here. If you're in your account and you go up to the upper right-hand corner and click on your account, there will be 7 or 8 drop-down menu items. One of them is your account. Click on it. It'll tell you when your membership expires. If it's within the 6 month period, if you're going to expire within the next 6 months, you want to sign up for this special right now. That will get you 12 additional months plus 2 free months, which is 14 months. And an even bigger part of this deal is you will get to test the StockCharts Advanced Charting Platform, ACP. If you were here last week, Chip came on, demonstrated it. We had so much positive feedback. This is going to be the next new thing at StockCharts, the next level that's going to take your trading to a new level. So make sure you take advantage of the special. It does expire on Monday. We extended it a week, but it's not going to be extended past Monday. So please make sure you take advantage. I hate to harp on it, but at the same time, I don't want you to miss out. Okay, let's look at the final market update, and then we will get into the what would you do. I'm going to go right from the homepage here and just show you some things that you can do to get a quick update yourself. Anytime you want to look at the market. First of all, right here in the market overview, I look at this quite a bit. I mean, here very quickly, I can see exactly, the major indices and what they're doing over the course of the last 24 hours or so. So I think this is a wonderful way to take a quick look at what's going on in the market. Still, we're off of the lows, but we also are off of the earlier highs, trading in a range. Let's see which way we break. Now, as far as the S&P 500 goes, I wanted to go over a couple things. First, the heavy volume. So if you do the most active on the S&P 500, you'll see the 10 stocks that come up. A couple of them, and I've been talking about advanced micro devices and how this one on a relative basis has been such a strong performer. So let's pull it up on a relative basis. And here you go. Here is a stock that relative to the semiconductor group is now trading at about a 7 or 8 month high. That's what you want to see. If you're going to be in a semiconductor stock, be in one that is attracting more than its fair share of money. And AMD fits the bill. So AMD doing very well. If we go back here to that list again, the most active, Cisco just reported earnings. You can see when you just hover over the ticker symbol, you can see that little mini chart. It's getting close to that $57 level, which is where it topped in April. So we want to respect that. But I think Cisco has lit a fire back under the telecom equipment group. So I think that's a great thing. AT&T actually breaking. I'm going to pull this chart up because I do think that for the first time, it's starting to show some nice volume. And it has gotten through after gapping down. You see that intraday move up to about 31.60. We got through it yesterday, closed above it, and now we're putting in another new high. I think gap resistance a little above 32 is the next level. But I actually like what's going on here with AT&T. I wouldn't be surprised to see continuing movement there. And then the last one I want to mention that's heavy volume, check out Microsoft. Microsoft tried to make a breakout above 130 earlier today. Maybe it does it at the close. I love Microsoft. I've talked about this one quite a bit. I think on the relative chart, you'll understand why. Here is your strength in absolute terms. Here's software moving up in absolute terms, and here are your relative strength charts, all moving up from left to right. Microsoft is a great stock within a great part of the market. The only question I have right now is short term. If we fail here, maybe we consolidate a bit more. But I think down the road, Microsoft breaks out. Gainers, let's go back to that screen one more time. And I'm just going to show you the percentage up on the S&P 500. How about Under Armour making a big move today? Here you can see a gap up on heavy volume in early May. I think we're going back to test that 24 level. A breakout there, I think, would be very bullish. So keep that one on your radar. Humana and United Health, both on this list, both in healthcare providers, and healthcare providers trying to make a turn back to the upside. Notice with equal lows here, we had higher PPO, trying to get back through the 20, 50-day moving average and price resistance, both at 260. I think Humana would really be turning the corner if we can break out above 260. I would watch that level very closely. United Health, UNH, very similar looking chart. We are trying to get through the 50, but we've got some overhead resistance. I'd like to see this one bust through about 245. If it could do that, I think UNH also would be turning the corner. Last one also in the healthcare area, Nectar Therapeutics, one of the heaviest volume stocks. You can see yesterday it was weak. Notice, though, on this chart, going back the last 6 months, 30 to 31 is really big support on this stock. Coming down on heavy volume yesterday, not a good sign, but so far, reversing back off of this 31 level. Close below 30, Nectar would be in bad shape. All right, that is it for the update. So we're going to move into our final segment. This is What Would You Do? Again, the poll that is running currently, if you haven't already gone in and taken it, take a look at a couple charts real quick. The SMH and the IYT, these are two ETFs that track semiconductors and transportation stocks. You can go into the poll and tell us whether you would buy one or the other, or maybe both of them, or avoid both of them. Those are your choices. And Mary Ellen and I are going to give you our thoughts on that right now. And in fact, Mary Ellen,
yeah,
SMH, IYT, what do you think on those two?
Okay, I'm wondering if we could maybe shout out a little bit of a timeline on expectations. Is it shorter term?
Yeah, I would say, yeah, that's a good question.
6 months. Take us through year end.
Yeah, let's just say for the next 6 months. And the question is, and the other thing too to consider is, it's not, do you think the SMH and the IYT is going to go up? But is that where you want your money? Are there other areas that look better? I think is another way of looking at it. So yeah, over the next 6 months, would you put money into semiconductors and transportation stocks?
You bet. Okay, so let's go ahead and take a quick peek here at the SMH, and this is VanEck Semiconductor ETF, and we can see where the ETF here more recently has clearly fallen out of favor.
Make sure you grab that screen, Mary Ellen.
Oh, you bet. One little extra button there, and now we're good to go. So here's the semiconductor ETF. I don't know if I should spill the beans on which one I'm preferring, but I'll just go ahead over quickly and take a look at how these semiconductors have been really beaten down, primarily because of trade war fears. And then also some of the companies, not all of them are coming out with good numbers. Intel is a heavyweight in this ETF, and they have a very, very flat outlook for the next 3 years. But bigger picture, I wanted to show you the projected growth prospects for these semiconductors when they get going. So what we're looking at here is a weekly chart. You can see from 2016 into 2018, the beginning period before the market correction, semiconductor stocks had a significant advance. They doubled in that 18-month period. And then more recently, they've had a significant advance in the beginning of this year as well. But more importantly is for me, I want to look at those growth prospects when a particular area gets going. So if we look at IYT, that's the transportation index, same period. It's been a little bit waffly here. We had this huge fallout, of course, in line with the bear market, but it really has not gotten its firm footing subsequent to that. So without even drilling down further, I do have, just because of the way I invest, I'm on the prowl for growth stocks. I am going to have a predisposition toward semiconductor stocks. But of course, we have to drill down and take a look at some of the underlying stocks within there. Intel is by far the heaviest weight. This particular company is 11% of that particular ETF. We can see where it's dropping. Analysts continue to revise estimates downward. And it has everything to do with the company revising their outlook downward. But I will say that we can look outside of Intel for signs of particular strength. I think Applied Materials did come out with positive numbers, but more importantly, the company guided higher going forward. So we're seeing this nice reversal. BRKS is another positive name. I can drill down and show you many others that are withstanding. These are the companies that are coming out with good numbers, but more importantly, they are guiding higher going forward. So let's take a look at IYT very quickly, and I can share with you as far as the components, because the underlying stocks within there, we've noted that rail stocks are faring well. But then if we drill outside of that and take a look at, for instance, FedEx and UPS, these guys are dependent upon a continued global growth. They are going to be impacted by any kind of tariff, trade war fears and pressure. So they're not very much in good standing, and trucking stocks are suffering as well. Airlines not doing so well, and the prognosis is not particularly good for those areas. So I think I spilled the beans and said that I do think that semiconductor stocks, when they get their footing back, once we are beyond some of these Trump tariff-related headwinds, I do see those stocks picking up, certainly in the latter part of this year.
Okay, so what is your final conclusion? So are you
SMH?
SMH, you buy?
Or semiconductors, yes. I would buy on more of a pullback. Not quite yet. We're not quite there yet.
Okay, no hedging.
Oh, yes, SMH.
Okay, so you would buy SMH and you would sell IYT.
Okay, yes, I would have to sell IYT. Okay. Yes.
Is that fair?
It is.
It is fair. Okay. All right. All right. Well, let me first start off. I'm going to, I know you pulled up Intel. Intel is about 12% of the weighting on the SMH. TSM, Taiwan Semiconductors, 9%. So those two stocks, 21%. You throw Qualcomm, Texas Instruments, NVIDIA, and Broadcom in there, and you're up over 40% on those 6 stocks. So I thought what I would do just very quickly is take a look at, we'll start with Intel, and just go through those 6 stocks real quick. All right, so first up is Intel. Oh boy, yeah, I definitely think that there are some issues going on here. Intel was always eating AMD's lunch for the longest time. That has not been the case for quite some time now. And in fact, I think if we go back the last couple of years, I'm going to pull up an AMD INTC relative chart, and I'm going to go back on this. Let's just go back we'll go 10 years back. I haven't even looked at this, so I have no idea what this is going to, I'm sure that AMD's been outperforming for the last couple, but let me pull this up for you. Yeah. So since 2016, I don't think there's any doubt which one of these two stocks I would rather own. Now, AMD has gone through some rough periods, where it underperforms Intel, but from the October 2015 low to where we are right now, AMD has just crushed Intel. So when I look at the list of holdings in the SMH, AMD is nowhere on the list. And in fact, I've got Intel, which, like I said, is not exactly one of my favorites right now. I'm just going to look at it versus the semiconductor group, the Dow Jones US Semiconductor Index, which is a little bit different than the SMH, by the way, as far as weighting and so forth goes. But let's look at Intel versus the group. Okay, that's been underperforming. If I look at TSM versus the group, it peaked 5 months ago. Starting to roll back over again. That's 20% of the SMH, 21%. Qualcomm, I like. Qualcomm, I think after the huge move, needs some consolidation, but there's no doubt this one has been a pretty good performer. Texas Instruments topped on a relative basis back at the end of January, had been in a downtrend, is currently in an uptrend, so it's starting to show some leadership, relative leadership, meaning that it's going down, but it has not been going down as fast as the group. So I like that. I like the volume trend starting to turn more positive. I'm okay with Texas Instruments. I don't think it's one of the best stocks in the group, but it's certainly not one of the worst. NVIDIA, not good. Look at the relative strength here. Then we go to Broadcom, which is AVGO. And this one has been one of the better stocks. Now, this one of all I've looked at so far is probably the best among the group. And then let's see, that was the top 6. I'll throw ASML in here. That's the 7th one, which is about 5%. And that one is starting to show relative strength as well. So here's my problem with getting into the SMH. I see a number of semiconductors that I like better than a lot of the stocks that are in the group, especially the top 2. I mean, 21% of the SMH is Intel and Taiwan Semiconductor Manufacturing. I don't want my semiconductor money in those 2 companies, not right now. I would much rather have AMD. I'd much rather have Applied Materials, which I talked about earlier. Actually, I didn't realize this one taking such a big hit recently, but this is one, I don't know what's going on, whether this was earnings related or what happened here. Maybe, Mary Ellen, you might know. You know what the story is behind IPHI?
Yeah, it's not earnings related. It has everything to do with the sanctions that Trump put on.
All right. Well, those are a couple key levels. Really, the big one was the breakout here. Came back, tested, and held it, broke out again. So I think these 2 levels are actually pretty good support. I wouldn't be surprised. We already put a tail in today. I might this one because of the volume. I don't know. Maybe I'll have to wait and see how it closes. But I think this could be an opportunity. This stock that actually had been a very, very strong performer until these last 2 days. I did not know this was going on. But anyway, I could go on and on. But I think with the semiconductors, my point is I could find other stocks within the semiconductors, even basket of stocks that I would like better than the SMH. So I'm going to be a seller of the SMH. I don't think I want that one. Now, the IYT. All right, let's pull it up. This one I'm going to have a similar problem because it's being weighted down by some of the airlines and some of the truckers. I really like the railroads. If it was a railroad ETF, I'd be all over it. Okay, as I look at some of the holdings in the IYT, the first one that is the biggest holding is NSC. So let's pull up NSC and look at the relative chart. And NSC is one of the better railroads. And this is 11.3% of the IYT. So that is awesome. What is not so awesome is that the next 10.4% is FedEx. And look at FedEx. FedEx is just horrendous. It's poor versus its peer group. It's obviously had a rough go versus its the S&P versus its peers versus a lot of different areas. On its absolute chart, I think it needs to hold 170. If it fails to hold 170, we're likely to roll over to the 150 level and maybe come up with a double bottom in December. But again, this is 1/10 of your position in the IYT. UNP. All right, another railroad, which is good, but it's been underperforming versus the railroads of late. So it's not one of the better performers. This is almost 10%. And let's do one more. Kansas City Southern. This was actually my pick on Monday from the Monday setups, having a really good week. I like Kansas City Southern because it had pulled back on a relative basis, but as of a month ago was trading at about a 7-month relative high to the railroads, and I just like the railroads. I also like the fact that you could keep a pretty tight stop. We were sitting at the 50-day. We were at gap support, stock rallying back. So KSU I like. So now we've got 3 of the top 4 stocks in the IYT. They are railroads. So I'm going to like this one better than I like the SMH. The only question is, do I still want to own it? Oh, let me pull up one more. I'm going to pull up the LSTR, which is Landstar. And this is a trucker. It is one of the better truckers. All right, that will be the tiebreaker. That'll be the coin flip. I'm going to go with the IYT because I do like the majority of the components. I'm not a fan of FDX at all, but it is at support. Maybe that'll hold. I'm going to go with it. So I'm going to say buy IYT and sell SMH. And you're going to say buy SMH and sell IYT. So
right. And I think you left Qualcomm. They're a 7+% part of SMH.
No, I did talk about Qualcomm.
Oh, you did. Pardon me.
Yep, I did. I liked Qualcomm. I said I really liked Qualcomm.
Super. All right. So we're going to have to circle back here, put it on the calendar, and see who has to buy each other a case of beer. Okay.
I want a craft beer. I'll get you a Miller Lite or Coors Light. Anyway, all right. So there's your summary. Just giving you an idea of what Mary Ellen and I would do looking at them. And, I'm more of a short-term trader. I mean, I could have just gone sell on both of them because I like individual stocks better. So everybody's got a different opinion on how they approach it and what they do. Those of you who trade ETFs, I think both of those ETFs actually are going to be pretty good over the next 6 months to a year. I think Intel will eventually come back up and market will move higher. All right. The overwhelming majority of the group, well, not overwhelming majority, but the highest percentage, 46%, are saying to sell both. 23% are saying to buy both. And the minority are in our camp. We're in the minority here.
Now, what would they go into? That should have been the part B. If you're selling both of those, do you go into the consumer staples or?
Yeah,
I don't know.
Yeah, you thought way further ahead than I did. I didn't. It's too late to run another poll real quick.
Quick, tell us.
Yeah. What if you were going to get into an ETF right now? What would you get? Would it be the software, the SWH?
I do like the software. Yes, there's a lot of traction there. And a number of the enterprise software stocks, in addition to being high growth, high demand, cloud computing related, they also have an element of defensiveness because their clients are paying on a regular basis. So a couple of good factors in there. How about you, Tom?
Yeah, I mean, software, I've talked about it quite a bit. I mean, that has definitely been one of the best areas of the market for quite some time. And as long as it's not broken, why try to fix it? I mean, it's a group that continues to work. And I think as long as it continues to work, I'd be in it. I'd certainly have representation of software stocks in my portfolio. No doubt. Okay, there is your upcoming schedule. By the way, it's always great to have you on here, Mary Ellen. Appreciate your input.
I enjoy it. Thanks.
All right. And for all the rest of you out there, I mean, this has been quite a hectic week, but we're going to get through it. Just stick with us. We'll do the best we can to kind of walk you through it. Thanks for being with us today. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Have a safe weekend. And would love to see you back here on Monday. Happy trading.